In June 2026, the aerospace company SpaceX launched the largest initial public offering of stock on record, sparking a frenzy on Wall Street. The IPO raised $75 billion in proceeds. For CEO Elon Musk, the surge in share price pushed his personal net worth past the $1.1 trillion mark. To see the scale of that number, look at how he compares to other tech leaders. This chart shows Musk is now 4 times richer than Google co-founder Larry Page and over 5 times wealthier than Meta's Mark Zuckerberg. This shift reflects a broader change in the global rich list. A decade ago, the top spots were occupied by finance and manufacturing leaders. Today, the top 6 spots are held entirely by the heads of technology firms. While these numbers place Musk at the top of the global economy, the $1.1 trillion figure hides a significant financial contradiction. Musk possesses more verified wealth than any human in history, yet he has repeatedly claimed to be cash poor. According to recent disclosures, less than 0.1% of that trillion-dollar net worth is held in actual cash. It seems impossible. How does the world's first trillionaire have almost no money in the bank? The answer requires us to redefine how we view money in the modern economy. To find the money, you have to look at the massive corporate infrastructure he has built over the last 2 decades. The first pillar of his wealth is a 12% stake in Tesla, an electric car maker currently valued at roughly $1.5 trillion. The second is a 42% stake in SpaceX, which reached a valuation of over $2 trillion following its stock market debut. This wealth consists almost entirely of these corporate shares and performance grants, which only pay out if the companies hit specific milestones. However, these valuations exist despite a lack of present profit. SpaceX actually lost $8.7 billion between the start of 2025 and early 2026. Investors are paying for the future. They are betting billions on Musk's ability to colonize Mars and lead the race in artificial intelligence. Because this wealth is tied to stock market sentiment, it is extremely fragile. It can grow by billions in a day, and it can disappear just as quickly. This chart shows the instability of paper wealth. In 2022, a tech stock downturn wiped $200 billion off his balance sheet, the largest personal loss in history. It happened again in early 2025, dropping another $126 billion in 3 months. That decline was triggered by market anxiety over his role in the incoming Trump administration, proving his net worth is tied directly to public opinion. Paper wealth is highly volatile. It can make someone a trillionaire on Friday, but it leaves them exposed to the whims of politics and market panic. If his wealth is locked in stock and he has almost no cash, how does he fund a lifestyle or buy new companies? He uses a mechanism called leveraging. By pledging his shares as collateral, he can take out massive personal loans from banks. This specialized accounting strategy allows him to access enormous spending power without ever needing to sell his shares or pay the resulting income taxes. This access to liquidity allows Musk to convert his paper wealth into tangible influence over American life. In politics, he spent over $291 million on super PACs during the 2024 election cycle. In the federal budget, his companies have secured $20 billion in government contracts. And in education, his foundation is currently pouring hundreds of millions into establishing new STEM-focused schools and universities in Texas. Musk's trillion-dollar status proves that modern power is no longer about having cash in a bank. It is about an index of public confidence, a massive, fragile bet on one man's version of the future.